Welcome back, I'm Sage and you're watching the Sectoral Pulse by Calkine TV, a special show covering all the sectoral movements from the markets for the day. And today we are going to talk about the federal budget and which sector is cheering the budgetary announcements today. First up is a quick update on markets. Australian shares inched lower on Wednesday, with most losses in energy stocks and major banks, tracking an overnight Wall Street sell-off as worries about rising inflation in the United States weighed on risk sentiments. Wall Street closed lower as rising commodity prices and labour shortages fed fears that despite reassurances from the US Federal Reserve's near-term price spikes could translate into longer-term inflation. Australian energy stocks skidded 0.74%, even as oil prices rose amid lingering fears of gasoline shortages after a cyber attack on the US fuel pipeline system. Sector heavyweight Whitehaven Coal fell 2.87%, followed by Origin Energy losing 1.48%. Financial stocks tumbled 0.54%, with all the big four banks in the red, even as the country's biggest lender, Commonwealth Bank of Australia, almost doubled its third quarter cash profit. Suncorp Group and Omni Bridgeway Ltd led the losses. Building materials firm CSR Ltd jumped as much as 6.3% to a more than 13-year high after posting a higher full-year profit. And moving on to the global markets, Asian shares fell for a second straight session on Wednesday to one-month lows as investors speculated surging commodity prices and growing inflationary pressure in the United States could lead to earlier rate hikes and higher bond yields globally. MSCI's broadest index of Asia-Pacific shares outside Japan faltered 0.5% after tumbling 1.6% on Tuesday for its biggest daily percentage drop since March 24th. Across the Tasman Sea, New Zealand's benchmark S&P NZX 50 fell 0.2% to 12,613.9. In other markets, Japan's Nikkei and the S&P 500 E-minis futures were up. Shares in China opened in the red, with the blue chip index off for 0.2%. Overnight on Wall Street, technology stocks were among the biggest losers, though the tech-focused Nasdaq reversed the bulk of its early 2% decline over the course of the day. The Dow dropped 1.4% and the S&P 500 fell 0.9%. All eyes are now on the US Consumer Price Index report to be released by the US Labor Department on Wednesday, with market-based measures of inflation expectations having moved higher. Treasury yields have remained stuck to a tight range. The US Federal Reserve expects higher inflation, though officials have pointed to transient factors and base effects for the temporary rise. The dollar was up 0.2% against the Japanese yen at 108.84. And the dollar index, which measures the greenback against 6 major currencies, was little changed at 90.297. after touching a 2-month low of 89.979. And the currencies of major natural resource suppliers such as Canada stood firm amid rising commodity prices. The Australian dollar, another proxy for commodity prices, was not far from a 10-week high of 0.7891, struck on Monday. Moving on now to the commodities front, oil prices were lifted by fears of a gasoline shortage after a cyber attack caused an outage at the largest US fuel pipeline system. US crude gained 17 cents to $65.45 a barrel, and Brent crude added 15 cents to $68.70 per barrel. The spot gold was off at $1,829.90 an ounce. In the cryptocurrency space, Ether hovered near record highs touched on Monday to be at 4,162.86. The value of the second biggest digital token has surged over 5.5 times so far this year. And now moving on to the federal budget 2021. In his federal budget speech, Australian Treasurer Josh Frydenberg said that the Scott Morrison-led Liberal Party government would be investing 1.2 billion Australian dollars in Australia's future through the digital economy strategy. And the move has sent the ASX-listed technology shares soaring. Of this allocation, the most glaring announcement was the government's plan to spend 100 million Australian dollars in a bid to boost the digital skills of Australian citizens to meet the needs of the modern Australian workplace. The government also committed to spend 124.1 million Australian dollars on artificial intelligence, or AI, including a National Artificial Intelligence Centre led by CSIRO Data 61. To put it simply, the Australian federal government is planning to spend 8.33% of its digital budget for making Australian tech workers future ready. It is also allocating another 10.3% of the 1.2 billion Australian dollar digital budget towards AI, classified as an emerging technology in the ITES parlance. Perceived as game changers, the emerging technologies include cognitive robotics, artificial intelligence and machine learning, among others. Most tech companies across the globe have been battling a huge issue on the human resources front in the past few years, and the skills gap for the emerging technologies. As the companies have moved to have more focus on things like artificial intelligence and machine learning, there has been an increased demand for workers with these skills. However, there has been paucity in supply of resources on this front, as curriculums across the globe are still not covering the new and emerging technologies. And this skills gap, in turn, leads to the escalation in the salary costs of the tech companies. The human resource experts suggest that a person with expertise on emerging technologies has been, at an average, earning 25% more than his or her peers from the traditional IT space. The government's focus on boosting Australians' tech skills might also help reduce the costs of the Australian companies in the long run. Until now, the IT companies have majorly taken upon themselves to reskill their workers on the emerging technologies. A policy thrust towards it is obviously a game changer. Investors, meanwhile, seem to have endorsed the government's plan on tech spending. Even as the ASX 200 is down by 80 basis points, the ASX's IT sector index, ASX 200 Information Technology, is up 2.016%. The shares of top information technology companies are rallying, including Afterpay Limited, up 2.12%, Xero Limited, up 1.71%, and WiseTech Global Limited also up 1.52%. On the other hand, Australia's travel and tourism stocks fall after government says not expecting international travel to resume until mid-2022. International borders are likely to remain closed until mid-2022, even after Australia's vaccine rollout is completed, the government said on Tuesday. Flag carrier Qantas said that it will adjust its planned international flights from the end October to late December. QAN extends losses to third session, slides as much as 3.9% to hit the lowest since February the 1st. And tourism service providers Flight Centre Travel and Webjet also fell. Sydney Airport Holdings sheds 4.5% to hit its lowest level since March the 4th. And thank you so much for joining us for that report, and that's all for now. Keep watching Kalkine TV for the latest updates on the markets and exclusive coverage on the federal budget. Sage signing off for now.